Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content for Tuesday, April 26th. It is 6:47 in the morning as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures, mostly flatlining, a little bit of red out there on the equities, but really nothing to speak of. I'm going to just call it flat. On the macro front, we've got some information. Durable goods will be an important number. We've also got new home sales and Case-Shiller housing price indexes. We've got a consumer sentiment reading, Richmond Fed, and a 2-year bond auction at 1 o'clock. Lots going on the earnings front, as you know. Before the bell, got some important names. UPS, 3M in the industrial sector, Pepsi, consumer staples. One I'm going to watch is VLO, Valero refining in the energy space, Raytheon in defense, and DR Horton in home builders. And then, of course, this afternoon we've got the balance of the FATMAAN starting to report. We've got Microsoft and Google, along with Visa, General Motors, Chipotle, and Texas Instruments in the semiconductor space. So let's dive into yesterday's action, which was interesting. I guess it's always interesting to see how the day plays out. Really wasn't what I was expecting or hoping for. And that idea right there is cautionary. When you have an expectation or an idea, I guess that's fine, but you can't get locked in on it. You got to keep with that leaf on a stream mentality. Happy to go with the flow. Recognize the flow. If you were expecting a left turn and a right turn comes upon you, you can't be stubborn and say, well, I was wishing, I was hoping, I was planning on a flush move and fight that if you don't get it. So yesterday, I thought we would get a flush move to get these oscillators oversold. That didn't happen. We made a marginal low and things reversed in the afternoon. We didn't get, this thing down into minus 60 territory. That would have given us a really clean signal of being oversold. Same thing over on the NYMO, on the NYSE. We got down to minus 46, and you can go back in time. It's a little high to be calling, this is a major bottom and it's, now we're going to race back up to the top. But that being said, these aren't normal times in the sense that we've got a lot of market cap reporting here in the next 3 days. I mean, all the FATMAAN names, the ones that are left, Microsoft, Google, Facebook, Amazon, and Apple. And if those I assume they're going to report good numbers. And then it's all about the reaction. So if the reaction is, 100% positive across the board, and those reactions hold, then yeah, this thing is going to rocket up just by sheer, market cap and lifting the indexes, lifting a lot of names, lifting sentiment, etc. That could mark the low, or we get, anything can happen on earnings. That's why I always say I never really feel like I have an edge in that type of scenario. So, they could, pop it after hours, and then the next day, they fade it. So, we're in a wait and see type posture to see how those things react. And just as a reminder, don't put a lot of faith in the after hours move. We saw that in Tesla. They did a moonshot and then they faded it. We've seen, other instances of, they crater it and then the next day they buy it up. So it's going to take a good day or so on these big mega cap earnings to find out really what the market thinks. And so don't go off the deep end, after hours on whatever one of these names may or may not do. Keep an open mind and let's see how it plays out. Now, yesterday, we've been talking about that it's a good idea to keep an eye on the VIX, especially, if you're intraday trading, if you're an active trader, to watch that VIX trend during the day. And yesterday, the VIX gave a really nice type signal that a rally was afoot. We broke higher in the morning on that first initial wave of selling, but notice that it peaked out about, what was the high? 3160. But the height of it, the actual value is not as important as the trend. And then, so you had your high and then it started rolling over. And if you married that with the price action that we were seeing, then you had a good opportunity to get out of whatever shorts that you had and switch to long on your indexes or whatever names you may have been trading. So if you didn't catch that, that would be a good thing to add in your narrative or your playbook, is to simply keep an eye on a short-term time frame on your VIX. And if you have a montage on your trade platform, you can dedicate one panel to the VIX, and that way you can bring it front and center, or if you prefer, just keep it on the sideline in your watch list. Just don't forget about it. And then when you see some indecisive price action, the VIX can help inform you of which way that price action is gonna break. If you see price hesitate, but you see VIX continuing to rise, that would probably lead you to believe that there's going to be some more selling. But yesterday we had the opposite. We got down to a level and then VIX rolled over. I do want to show you this volatility term inversion metric that I introduced I guess yesterday, possibly Friday, I can't remember, over the weekend I think it was, where we've got two term structures that we're looking at. We got the inversion, or at least a touch, down here on the ultra short term volatility structure. We didn't get that on this larger one. So we didn't get this nice full-blown big reversal signal that we got back here, here, and here. So this is more of a, what I term, kind of a weak signal, where we got half of what we were looking for. We put in this hammer candle yesterday. So then we're just going to have to see how high this bounce can take us. Moving on to SPY. What I've done on these indexes is for the most part drop in the Fibonacci retracements, because this is the this is the classic setup where fibs can really help, especially if they line up with technical resistance. So here on SPY, 2 big days of selling, followed by this hammer candle yesterday. I've dropped on the fibs, And you can see we've got two levels that are really aligned well with technical resistance. The first one being right here at 430. Then we've got a 50% retracement here around 434. And then we've got the 618 retracement back at the 200, back at this large line of volume over price resistance at 437.5. If somehow we get, a big rally, and I'll just say big, a 618 retracement back in to to back test the 200 by testing the 200 from below, I think that would be a really high probability place to look for, one, scaling out of your longs if you're in them, or starting to redeploy shorts at that level. And then you can use the 200 as a hard pivot point going forward, that, if we break above the 200, that'll be a big bullish technical event. And just as big and important is a rejection at the 200. So I think that's going to be the most important level going forward. But if this turns out to be a rather weak bounce, this 430 aligns really well with the 38% retracement area. And just remember, the health of a bounce in large part is determined by, how high up on the pivot can you get. A 38% bounce is rather weak. And if you see a turnaround at that point, then chances are the next leg down will go rather far. If we zoom down to the 60-minute chart, I just, you get a zoom in on the price action. So we came down 2 hard days, Thursday and Friday. We gapped down. This was kind of an odd place, in my opinion, to get a reversal, but it was what it was. Came back. You had an opportunity to buy when price, if you didn't get this low, don't get frustrated. Look for a place to buy above, and that was on the entry into the opening gap. And then there was a second or third entry here at 426 when it took out this prior resistance level. You can see that 426 was a nice line. You had a rejection, and support back in the chart. So today, if there were a scenario where we went up, got into that 38% retracement zone and rolled over, if you didn't get short at this level, if you missed it, and then you lost 426 from above, that would be an entry short as well for a move down to test these prior lows from March and February. And I think that's my base case, that somehow, some way, regardless of where this bounce comes up and dies, that we come down at least for a test of these prior lows. And of course, the mega cap tech will have a lot to say about that. Moving on to the Qs, we had the move down, a little consolidation, then a follow-up move. Notice that we touched the top of this support zone that runs from 318 to 322, and that's where the selling stopped and we moved up. I think this 330 is going to serve as a nice pivot today. If we break above that, then I think there's a good chance that we move up to this more significant pivot level towards 339. Why? Because this is where the big volume over price resistance comes. Notice support here, resistance, support, 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 support. So this is going to be big resistance right around that 339 type level. Here on the 1 hour chart, you can see that level is a little bit adjusted here down towards 336. And what I've done here is kind of pencil in what looks like a bear flag type setup. Now, if we go up this morning, that bear flag setup is going to be invalidated. So I just kind of penciled it in here. If this were to break down this morning ahead of those earnings, which I don't really expect, then that would open up the door for a move lower. But here this morning, I think you can go off this level here at 330 and take it long if you get a break above, and then look more towards 339, possibly in a run up into Microsoft and Google earnings. Moving on to IWM. Now, this particular index is not going to be as subject to those big mega cap earnings as SPY and QQQ. So we had the 2 days down. You can see that price respected this ledge of support here on the volume over price profile. So there was a reversal point there. I think a big level is going to be this 196.50 area. You can see that we've got an even larger area of volume over price resistance here, and it was support right in here as well. So I think that 196.50 is going to be an important area, and you can see that pretty clearly on the 1 hour chart, where you've got, support, 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 a big line of support here, and you've got the volume over price profile value area here. And so this morning, depending on how aggressive you want to be, I think you've got the potential for a long up into 196.50, or if you just want to kick back and see how it plays out before making any kind of a big position or decision about taking a position, I think your high probability line is right here at 196.50. If it breaks above, then I think you got a good high risk reward trade to the long side. If it can break above this line of resistance, then you can set your stop just below, and then you can look for a move up towards this 199 level, which would be the 618 retracement level, and also would be a back touch of this trend line off of the lows. And that's where price may encounter more significant resistance. Notice that also is where our highest volume over price bar comes in. So there'll be a lot of resistance right there between 199 and 200. If you're new to the channel, thank you so much for spending some time with me this morning. I place a lot of my effort on giving subscribers key actionable trading levels for the day. and giving you locations that you can trust, and then you can devote your time and energy on executing around those levels. If that's interesting to you, if you think that will be helpful, please hit the subscribe button, the alarm bell. Jump over in the show notes, find the link to the blog site where you can drop in your email address. It takes 15 seconds, and then you'll get all my content, morning, noon, night, weekends. Whenever I send something out, you'll get an email in your inbox. You won't have to look for it on Twitter or StockTwits or other places I may post on social media. And the fact of the matter is, much of what I sent out never makes it to social media, so it'll be kind of important and nice at your end to have that email come directly to your inbox. And as a side benefit, if you're interested and able to participate, you'll get an invite to our trading room where we'd love to have you. A lot of good ideas in there. So, and also pass the link along to others in your trading circle that may benefit from the work. Help me expand my audience. I'd really appreciate that. So moving on to the FATMAAN names. Facebook, had the rally, got rejected at the 50, and came right back down to the lows. We undercut those slightly. Facebook reports tomorrow night. So if you've got a nice line here right at, 187.50-ish, 187, where, if there's going to be a run-up into earnings, a break above yesterday's close would give you a fairly objective level where you can just stay long against yesterday's close at 187. And if you get, a bump or a run into the low 90s, you would have yourself a winning trade. And then you can decide whether to close that out today or hold it over for a potential follow-up run tomorrow into the print where you can, take it off. Apple had a nice bounce going from 159 to 163. That was a nice bounce. We had this level pre-identified, which was nice. That's the whole idea of the work. We had a large volume over price bar here that acted as support. I've dropped in the fib retracement zones. And so today, I think 163 is going to be a nice pivot for you. Apple reports on Thursday. If the market is positive and these names kind of run up into earnings, you've got a nice level here above 163 where you could get a run up towards 166. Notice where the fib retracement zones fall, you've got a 50% level and technical resistance right here at 165.5. So that's going to be an important level. But if you break above that, then you got a door up to 167. And then, of course, these other prior levels have worked really, really well in the past. But, now we're, pretty far away from these bigger resistance zones. Never say never. Price can do anything at once, right? But, if you got a break above today, I think you can be long. I would be cautious in the 165.5, 166 area. But if it can take that out, then you could potentially get a run up to 168.50. Moving on to Tesla. We've got the levels dead to rights. It's just a matter of, are you the kind of trader that wants to trade inside of this 980 to 1020 range, or are you a trader that's, says to yourself, I'm going to let this thing chop around forever if it takes that long, but I'm going to be ready on a breakout above, 1020, 1025 for a run back up towards 1080, or be ready on a breakdown below 980 where you could see price fall pretty fast because you've got a void in the chart, at least down to 930, and I think potentially could go a lot lower. I don't think Tesla is, unless there's some kind of fallout from this Twitter thing, that Tesla just all by itself is gonna roll down. I mean, we had 2 bad days of selling, and this 980 level has held all the way along. So that's an important level. And the thing to remember is the longer price stays within this trading range, energy is building. So either on a breakout or a breakdown, it should be, fairly impulsive. I don't think you're going to, just kind of dribble down here. I think if it breaks, all these people that had taken long positions are going to say, hey, got to get out, and that would fuel the move down. And the same in reverse is true on a breakout. If people were trying to bet on this breakdown and then you get a breakout, those people are going to cover, and then people like you and I that are waiting for the breakout will buy that long. So there should be some good fuel behind either a breakout or a breakdown. Or, if you're nimble enough, you buy 980, you wait for a move to the top of the box, that's $40, and then you just keep recycling it. I mean, traders do what's worked, and now for the better part of a month, buying 980 and selling 1020, you've had quite a few recycles that have worked. So that's all in personal style. So Microsoft, we have this afternoon after the bell. I think your pivot here is 282. That's right at the 50% retracement level. You break above that, I think you got a good chance of getting a pre-earnings run up into 285 and potentially even 288, where you've got the large volume over price bar. Here, I don't really see it getting above 288 before earnings, but at that point, it should be gravy, because I think your entry is right here at 282. Amazon, it's Thursday. Here we've got as perfect alignment with the fibs as you could hope for with these volume over price bars and prior levels. So you've got a level here at 29.50, at 29.88, and 30.22 here on the fibs. So I think that is your those are your upside targets on any follow-up move into earnings. Now, what could happen is, remember, say we have a little bit of a down open for any kind of reason, and then you break back above that level right here at 29.10, then you can buy that on the recovery of that level, get yourself a nice entry, and then look for basically the free 50 club, a level $50 higher, and then right on up the road on the long side. But just remember that you got to be cautious on that down move, especially if you see the whole market kind of rolling over. Any kind of break of this prior low, that would open up the door for more selling. And you've got an open gap down here, and you've got some other levels, and you see the prior low back here at 2,700. That's a really important level on the chart. If we were to go to the daily chart, a break of this low at 2,700, then a lot of selling will occur. Don't expect that to happen in front of earnings. They'll probably either, run it up or hold it the same, unless there's some kind of broad market sell-off, which I'm not really expecting. Just be ready for it. Google had a bounce as well. You've got a nice level here, right at yesterday's close, 24.61. You get a break above that level. Take out this 38% resistance level. I think you can come up into this 618 retracement area, 25.15 right here, where you've had some support, and that will become resistance here, with the possibility of getting all the way up to 25.50, where these large volume over price bars come into play. Netflix is just kind of drifting lower here. We've got our bracket trade. I think this level should actually be 212.50 on the bottom. I've got it marked in here, but I have this level not strictly correct. Just drifting lower, but notice the bullish divergence. We've got PPO rising. We've got RSI rising. So if you're interested and you get the price move, you get a break back above 212.50. Number one, you're recovering the range from below. That's a buy signal. And you've got positive divergence helping. And if the market is green, and you get that move above 212.50, if you're motivated to trade that, then you've got an open door back up to 250 on a technical basis. Whether it makes it that far or not, I can't tell you. All I can tell you is recovering 212.50 from below with positive divergence would be a pretty objective trade. SMH Semiconductors, we bottomed out here at what was the low, 232.40 at the bottom of this volume over price bar. We got the bounce. I think today what you want to do is kind of sit tight and look for a move above 240. That would get you back into this trading range. And remember our rules. If you break into a prior trading range from below, then your target is going to be the top of the range, which is at 247. I think that would be a nice risk reward, higher probability trade than trying to get something right out of the box and possibly getting rejected before you even really get started. So I think 240 is your level on SMH for a follow-up bounce that could take you up into 247.50. And don't forget, we've got Texas Instruments. I think is pretty highly weighted in the SMH after the bell. So if you got a if you're positive on the day and you get that breakout above 240, then keep in mind that either a good report or a bad report on Texas Instruments may move this index after hours and into tomorrow. So you have to judge for your own whether you want to hold that position or take the chance on that move after hours and into tomorrow. So let's wrap it up there. We're in bounce mode. I'm relatively cautious here. Why? Because with those mega caps reporting, absolutely no way of telling which way it's going to break. So my positioning is pretty light at the moment. May do some intraday stuff. If I see something developing, just as I've described here this morning. But as far as getting, big swing positions, I'm going to hold off, kind of see how things break here, whether we go higher on the back of the FATMAAN earnings or, whatever may happen. Like I say, my base case is going lower to test those March, February lows, but keeping an open mind that we could certainly rocket higher with those big mega cap names reporting. So I hope you benefited from the video this morning, giving you some good objective ideas on how to trade today. Let's see how it rolls, and we will pick it up later on. If I see something during the day, I will certainly let you know. So let's wrap it up there. This has been Chris Best with Traders Profit Compass. Have a good day of trading, and talk to you next time.